With all that central bank action last week, how the markets digested it, what's ahead? Well, let's check in with Pete McGuire from XM. Pete, good to catch up with you on a Monday morning. Good way to start the week. So, interesting, isn't it, where we're at the moment, as though investors feel everything, all that risk is priced in. Therefore, well, let's get back into it.
Absolutely, Andrew. Good morning. What a week it was, and if you didn't make $1 last week, then give the game away. It was just outstanding from all of that volatility. So I'm expecting that momentum to probably continue over the next couple of trading sessions. You might see it a little exhausted by Wednesday or Thursday, but it's been a very strong move to the upside for equities, and some of those markets have been nothing short of dynamic.
So what do you think investors and markets are looking for at the moment? Because obviously we've got, as you said, we've got those key central bank decisions out of the way. We have a better understanding of where that policy sits, particularly with the Fed. And of course, markets want that certainty. Plus what's going on in Ukraine, with it's tantalising at the moment that there may be some sort of breakthrough in talks, but obviously the fighting continues.
Absolutely, it does continue, and that's a geopolitical concern. Having seen what wars are like and all the moving parts associated with it, it's very hard for the layman on the street to actually take, I suppose, a correctional move or a directional move to what impact it has to economic markets. All the one thing it certainly has shown is the large volatility swings, as demonstrated by crude. Have a look what's happened as far as yen, US dollar index, and associated other equity markets. So that's the first part, Andrew. The next part where I'm looking this week is certainly along those PMIs being released, Australia, US, UK, coming out, and Eurozone on Thursday. So that will give me a heads up what's happening as far as growth numbers, those flash PMIs, Swiss National Bank meeting this week, and the overall themes of, market sentiment. That's what I think traders also look for. They look for that confidence factor, or unconfidence, or no confidence.
Pete, you mentioned commodities there, particularly where oil's going. It did sort of peak at 130, back around 110 at the moment. Interesting to see what else is going on in that complex at the moment. Nickel is, goodness, I mean, the moves in nickel, 23% lower last week.
Yeah, absolutely. Andrew, over the last, I've been following nickel, many, but least, but when you're thinking about where it hit 52,000 a metric ton going back to 08, we were sitting at 15,000 over the last, say, 6 months, and then it edged up to 20, then 24, and then all of a sudden took off to the races, and then it hit 100,000, and they shut down the LME, and I don't think they were allowed to trade it for around 10 or 11 trading sessions, and then it had a big correction last week. You've got to find a floor where buyers are prepared to pay for in exchange contracts. That's the futures market as a whole. So yes, it's incredibly volatile. That's a one-off. I could certainly talk in depth about that, but I don't think it'd do any value, because it's just quite extraordinary times, and very, very dynamic.
Yeah, absolutely. Particularly those new measures that are imposed by the London Metal Exchange too, to try and cut out some of that extreme volatility. But nonetheless, it continues. Pete, currency-wise, interested to get your thoughts, particularly as far as the US dollar, because typically when we see, when we're at the beginning of a tightening cycle, there tends to be a bit of weakness in the US dollar, does there not?
Well, yeah, we've had that big move up, Andrew, and that's been appreciated over the last couple of months, that up to 99 odd, and that was a, war premium built in. Also the baked in news that we're going to see rate rises head off in March, and that's now happened and delivered. So there's a little bit of that hot air's come out of the market. 98.23, we've got that US dollar index at the moment. Big moves last week. Have a look where the yen is. I mean, it's now considering 116, 117, everyone thought that may be the top line. Now we're at 119, approaching that 120 with a lot of vigor. So that really demonstrates the US dollar index. Possibly there's a little bit further softening to happen, and may give up some of those gains that we've seen over the last couple of weeks. And when we see the next comments coming from Fed Chair Powell and what their thoughts are as far as the inflation story globally, and the appetite as far as ratcheting up. Some of those chairs in the Fed are calling for 50 basis point hikes for the next one. So let's just see what happens from an appetite perspective, and all of that needs to be managed and I think identified from a trading perspective.
And Pete, how are you looking at China at the moment, obviously with the PBOC and the like trying to, well, obviously talking about continued support for the economy there in light of where they're at with those harsh lockdowns that are being imposed in the country as a result of the latest outbreak of COVID?
Well, Andrew, I think China has had a hands-on approach for decades now, and it's very much, I mean, that's a centralised system, and we all understand how that works, and they're not going to let this fail. Their appetite and their, I suppose, positiveness regarding their own economy is one that's going to continue to be at their front of mind. They've played a very strategic hand if we're thinking what they've been able to buy commodities for over the last number of years, and stockpiles at record highs. So they've done very, very well. And over the next couple of months, I think it's going to be a little bit of a, let's see the positioning as far as one, the Russia situation. Secondly, their domestic market. If COVID comes to a little bit of more of a grinding halt, or it intensifies from here, that's the future, and no one really understands that unless you're getting the raw data coming out of China. So keep an eye on it, but there's other markets to trade at the moment, and I think it's not going to disappoint over the next couple of weeks leading up to Easter.